is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for tuning in, spending your Friday afternoon right here with me. And we got quite a market, man. S&Ps, we're flat right now, 69.44. You hit a high all-time last week, 7,036. We rebound from the lows of this week. You come back from the long weekend. We get the reprieve of tariffs on Wednesday, and we've been chopping around yesterday and today right at this area. S&P's up by 1 point. NASDAQ 100 up by 71 points, or 0.3% right now in the green. 25,729. The Dow in the red off 320 points, off 0.6%, 49,237. And the Russell off 52 points, off 1.9% right now for the Russell. We jump over to yields, about 4.24%, the yield on the 10-year. And yeah, we got some action in currencies as the yen jumps the most since August. And yeah, the dollar, so you get the yen getting stronger. The dollar has some weakness right now. That's helping metals a bit. The dollar's off 76 pennies at 97.59. And check it out. Okay, we're at levels that we have not seen in almost 5 or 6 months, right? You got dollar weakness, and on a much longer term perspective, you've been watching this program, you've seen this channel line, folks, okay? Now, it doesn't have to be an exact science, as in it has to hold that area, but we keep challenging it, and basically since the beginning of last year, the dollar has struggled to find a bid. We've been now consolidating for almost a year. We hit under 100 in April of last year, right? And we've been chopping around. And now we're looking at potentially breaking the lows. You back it up to where we were at 96.21 back in September. Okay, remember that day? What are we at? September 17th or so? Yeah. So check it out. On this day, when we were at 96.21, whoops. This is that day here on your 10-year. Okay, and what that correlated to was you had higher price, lower yield. You had the 10-year approaching a 4% yield, and that was providing weakness in the dollar that had the dollar spiking to 96 and change. Well, the dollar's almost back at that same level of weakness, and the 10-year is now at 4.25%. So we're coming back into that area. We're not quite there, but boy, we still have dollar weakness, not even based off of yields, as the dollar just continues to struggle, and you better believe that's helping metals. Gold up by $65 at $49.79, and silver is the story of the day, $100. If you have any of those silver ounces out there, folks, that we were giving out at TFNN, we did a great promotion with Great Panther Silver a while back. I still have a Great Panther Silver ounce somewhere. I saved one for myself. We were giving them out. Well, right now, that's worth $102. When we gave that thing out, I think it was worth $12, something like that. Look at it. Silver was at $13 a decade ago. You were at $13 in 2018. Your COVID lows brought you down to $11. You were sitting at $17 in 2022. Okay, the metals run really started in the beginning of 2024. But boy, the last 6 months on silver just absolutely destroying every other metal out there. I shouldn't say that, but yeah, a run. You're talking about tripling in value, more than that, from $31 in May. $31 in May to $102. There's your monthly. You take a look at the weekly. There you go, Jim. Perfect. Yeah, we were giving out smaller ones too. That's right. We had smaller half-ounce ones in there as well. Awesome, man. Figured I'd stow that away, give it to Tommy. He'll have it someday. And hey, maybe, here's the wild thing, right? So check it out. Silver's at $102 right now. We'll just go in big picture. When I graduated college, folks, I'm 45 years old right now. I graduated Villanova University in 2002. And I remember at that time, gold was trading about $225 an ounce. $225. So it was only about double what silver's at right now. Okay? Let's back it up. 2002. Yeah, here we are. What's the beginning of 2002? Yeah. 270, 280, so maybe I think of 275. Okay? It was in the 200s for sure. 2002. Yeah. Let's zoom in. Yeah, look at this run. So it starts in 2001, and you go from 260 to 440, and there's 2002. Okay, so yeah, in the 200s. Well, now it's at 5,000, and that's 20 years ago. Okay, not a lot of years. That's how compounding works, but it also how we're in a heck of a run right now. So hold on to that silver if you hold on to it, and hey, in 20 years, maybe it'll be worth $2,500 because that's how quickly, and hey, depending on what happens to the dollar, okay, as we jump around, we have this recency bias where you look at the dollar, and we were so used to this run up to 115, and we had a period of 2022, 23, 24, and 25, where we were comfortably sitting above 100 in the dollar index. We're at 97.53 right now. And guess what, folks? For a majority of the last 25 years on this chart, the dollar was under where we're at right now. It was weaker. So when you look at metals, it's great conversations with Tim Ward on Tuesday and Thursday. He thinks we're at the beginning of this thing. And realistically, you look at this dollar, and you look at whether it's the fiscal ability of either party to get the debt under control. Okay, you look at the fact that the big, beautiful bill, look at that thing, no spin. I love it. There's that great picture, silver 1 troy ounce. I'll put that picture up. Here we go. Look at this thing. You're awesome, man. $4. How's that for a return on your investment? 25 times your money. I'm going to have to reach out. And let me see if I can throw it up here. This is perfect. Thanks for posting that. I can get it up there just that quick so everyone can see it on Tiger TV. How's that, folks? Look at that. I'm going to blow it up. Great Panther Silver. 1 troy ounce. There you go. I know. It's beautiful. That's the one I have, too. No spin. That's the one I have, too. Beautiful ounce of silver. And it's just in that little silver wrap. And they sent us sheets of these, folks. They sent us sheets of these. Oh, we're going to have to contact them. I need more sheets of silver, man. Come on. Mike, where's my man Mike? Let's go. Let's get the silver run going. We got to get some silver companies, and I need some sheets of silver, man. They were sending us sheets, and that's why you can see they're in sheets, and we would just cut them off. See how it's cut? Sheets of silver, folks. Yeah, different times. $4 an ounce. Remarkable. $102 on silver, folks. We got lots to talk about this hour. Thanks for sharing that. Jim, No Spin, everyone out there, appreciate it. Good times, good memories. Silver. Oof, I know. What happened? I'm going to look into that one. It's got me going now. Stay tuned, folks. Come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. And yeah, you jump over to Intel, and they are still a turnaround story, folks, as they put it, and you better believe it, man. Quite the meltdown. Down 17% today alone. All right, we jump over to Intel, and yeah, it's not just as easy as the government owning the companies and everything goes up, folks. And I'm hoping for the best, but boy, you see days like today. The U.S. owns almost 6% of this company. We basically just demanded a dilution of shares to take over that 10%. Yeah, and 4 months after that, now it's been a heck of a run, okay? And we are in the early stages of this experiment, we'll call it. But yeah, you're talking about a pullback, multi-year journey, okay? Take time to resolve. My team and I are committed to rebuilding this iconic American company. Yeah, and they have a ways to go. And that U.S. stake worth $12 billion with the option for the government to take ownership of additional shares in the future. And yeah, this is going to take some time, and you're getting that today. And you may see some real volatility, and you're seeing it today. You may. Down 17.3%. We take a look at the volume. I mean, you're going to do some epic volume today, and that's going to be on the weekly as well. And oof, that's not the kind of bar you like. I mean, look at this weekly. Oh, that's like a disaster on a weekly basis on the volume, man. You get way above it. You give it up. You give all of it up. I mean, this is like catastrophic. You go from $46 we closed out last week. You opened last week at $44.24. You make it all the way up to $54.60. You give up the entire gain. You do it with volume, and we are very close to taking out the entire last week of trading, which would be $44.24. Intel down by 17.3. That's your weekly volume. You know, maybe your test is right here. 36.30 was the last time, sticking out from September 22nd. Since then, it's been declining volume. You got a couple nice spikes after the holidays, but you're backing down. Can't help but want to check back on silver. Gold within 20 bucks of 5,000. Gold trading at 49.81. So the dollar yen. Now, it's been a remarkable day in the dollar yen. So you get this acceleration at about 2:45 in the morning, and then the slide begins at about 11 a.m. Eastern time. Now you jump over the headline, as it seems like the Bank of Japan is about to jump in. Okay? And forgive me, let me pull this one up. Because what happened is you had what's called a rate check. Now, you learn something new every day, man. There's nothing like experience. And, you know, in the market, right? Information is disseminated evenly, right? Equal access to information, no insider information. And then you read stories like this. And it's like, man, you talk about a leg up. Okay, imagine if you're on the desk and you know everything about a market, and you see, okay, that the Federal Reserve Bank of New York had conducted a so-called rate check with major banks to ask for indicative exchange rates. Do you know what that move sometimes indicates? It sometimes indicates that it may be preparing to assist with an intervention. Yeah. We hear that the Fed did a rate check on the dollar-yen market at around 11 a.m., which is what was driving the movement. That's one trader at Monex, okay? Japan's finance minister, the country's top official, issued fresh warnings to speculators earlier this month after the yen weakened. Japan last intervened in 2024 when it hit 160. Well, where were we this morning? 159.21. I mean, pretty remarkable. So that's when the slide really begins. Okay, you have volatility overnight, and boy, you have from 158.22 to 155.78. And remember that as this goes lower, this is the yen strengthening, and that is going to add weakness to the dollar, right? But yeah, so they do a rate check, and as they say in this article as well, it's important to note that the rate checks in the past have not necessarily meant an intervention was imminent. But the fact the New York Fed was asking implies that any potential intervention in dollar-yen won't be unilateral. Now, I got to do some research on that one, okay? But it seems like, yeah, you look at the context of things, you look at where this dollar-yen is, and let's go back, okay? And that's where you're looking at, okay? This is the last time, 2024, when you were approaching the 160 level. And you see what an intervention can do here. We're right back up at that level. 155. Those are good times, Dan. I was just reading that. Smoky Bones, that's where it was, man. Nashua, New Hampshire. I remember that. I was there. I got a nice walkthrough. So he's talking about we did. I don't remember the putting competition. Was it Nevada Bob's? There was a golf company that was our sponsor as well. $5 Gold Eagles. Really? And then we went to Smoky Bones, and I do remember that. I think he did his program live at Smoky Bones is what they did. They were just launching a Smoky Bones in Nashua, New Hampshire, folks. And I remember they gave me a whole tour at the time. And they gave me a tour of the Smoky Bones just when we were coming in there getting set up. And I remember seeing all those barbecued ribs just roasting, just smoking in that smoker, man. Smoky Bones. That was a brand new Smoky Bones at the time. They were just opening it, man. Time flies. Good memories, man. Whew. Yeah, and handing out metal. Well, unfortunately, I think we're going to have to be handing out grams instead of ounces this time around, folks. We'll see. But gold especially, going to be a heck of a competition at $5,000 an ounce. Yeah, the Tiger, 1590, right? That was it. WSMN, 1590, the Tiger. We were stocks and jocks, folks. We had business all day, sports at night, and we aired the Red Sox and the Celtics, I think. What was amazing at that time is because we were just outside of the Boston network, you could pick up the affiliate networks for the major sporting networks of Boston, right? And so, you know, you had, I think it was, yeah, what's the big sports AM radio that they're on? WBZ? No, that they, with the AM radio, as in, obviously, the big AM radio networks had scooped up the exclusive rights to the Red Sox and to the Celtics. But because we were just outside of their zones, we could be affiliates. And meanwhile, everybody in Nashua loved the Patriots, right? I mean, the Celtics and the Red Sox. And we were airing the games, and it was remarkable. So, all right. Yeah. Silver bars, baby. That's right. We're going to have to run a special promotion, man. We got silver at 100, man. We got gold at 5,000. We're going to have to run a promotion. You're right. We'll get it going. No spin. Exactly. But boy, you're going to see grams more often, man, when an ounce is 5,000. Because what are we talking about? What is it, 27? How many grams in an ounce? Is it 27 grams in an ounce? Let's see. 28.35, it says. So 28.5. All right. So right now, just call it 5,000 divided by 28.35. Yeah, a gram of gold is almost what it was costing when I was in college. I'm old, folks. It's happened. $176, and that's $5,000 an ounce at a grand. Even a silver. What's silver, man? 102. Look at this. Yeah, silver's an ounce of silver. Excuse me, a gram of silver is $3.60. A gram of silver. My goodness. Protect those metals, folks. Put them away. And yeah, we got dollar weakness, man. Metals. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Oh, apologies. Thank you, Al. So we have right now, we take a look at the heat map, folks. We get the S&P is negative by 3. This is your S&P 500. There's only a few equities that are in the green. Look at the amount of red, man. You got NVIDIA, though, up 1.4%. Microsoft up by 3.6%. We'll take a look at them in a moment. Meta up by 2.25%. Amazon 2.1%. I mean, all these growth stocks. Palantir 2.2%. Not Intel. AMD up by 2% right now. But, boy, look at the financials, right? Blackstone down 3.5%, KKR off almost 2%, Goldman Sachs down 3.7%, Capital One off 7%, JP Morgan, even Berkshire, Bank of America off 1.5%, Caterpillar off 3.5% right now as well. Take a look at Microsoft, quite a run. Look at this thing, man. Whew. So they land a new deal, a major government contract, and a new robotics-focused AI model. $170 million order for its Cloud One program. That's going to allow operate on Azure for the Air Force operations and customers. Slated to run through December of 2028, and in a separate announcement, yeah, they got robotics. It's a robotics model built from the company's 5 family of vision language models, capable of turning natural language instructions into control signals for robots performing complex two-handed manipulation tasks. Pretty remarkable, the rate of change going on right now. Microsoft up by 3.6%. Meta shares up by 2% right now. Take a look at the volume on Meta on a daily. Yeah, decent volume on these 2 days, man. We got quite a bounce going on right now. Meta up by 2% right now. NVIDIA, the big dog, up by 1.25%. You know, I was listening to some gentleman. It might have been Ken Griffin, and it might not have. But it was a recent Davos speech, and I saw it. And it made me start thinking, of course. And one of the things they mentioned, if anybody knows who I'm talking about, please let me know. I just forget who I was seeing say this. But something that was remarkable is that we're talking about yields, okay? We're talking about yields have been going higher, right? And we have, whether it's fiscal problems, whether we have, now you're talking about that we have the Federal Reserve has issues, okay? You've seen the weakness there, right? We have tariffs have issues. But when you talk about the instability with the yields, what's remarkable is that when you look at recently that you have equities and the price of yields falling at the same time. Okay, so what happened is they usually act as a hedge. Now, that's not always the case, but in the long term, they usually act as a hedge because when you choose to sell equities, right, you have to do something with that money. So instead of just putting it in an account that earns nothing, you buy fixed income and you're earning a return until you're buying equities. You got 2 pieces of the pie. So as you go risk off, right? Risk off, they sell equities, you buy bonds, right? And that increases the price of bonds. Now, in theory, if that keeps happening, what's going to happen? The interest rate keeps going down as price goes up. But the reason why the yields are so affordable is because they are a great offset to the equity side of the portfolio. They act as a hedge against the equity side of the portfolio. So the fact that you have a hedge while you're earning returns really is a huge bonus. And if that hedge relationship, right, that anytime that you have equities tanking, okay, because when equities tank and yields go up, that means they're both dropping simultaneously. And that's what's been happening on certain days, okay, certain weeks right now. And if that happens, the point the gentleman made, and I'll find this clip and I'll talk about it again because it was a great clip. He said if that becomes the new norm, the yield that investors are going to demand for those products like the 10-year, okay, like government debt is going to be much more substantial because they're no longer going to act as a hedge against equities. Now, we're not there yet, but boy, we've had some funky action in markets, whether you're talking about the dollar trading lower, yield spiking, and even at a time when markets pull back, they have not been flocking to fixed income on certain days as we have a shift of some of the action going on in these markets. Jump over to that dollar. Off 785 ticks, 97.57 right now. Maybe we'll get 5,000. Going to have to be quite a run the last 25 minutes of the program. Gold at 49.79, but silver rang the bell. It's not stopping, man. I was in the Tigers Den last night. They were talking about saying it's coming. Silver's making the run. Pretty remarkable because it sure was, man. Last night, there it was, right? At 8 o'clock, you accelerated up to within about $1 of 100, and you saved the main event for today. Look at that run from about 3 a.m. Eastern time. Jump back to the dollar yen. Look at this. Just take out everything back to all the way in November, just like that. 155.88. You got yen strength, and that's correlating to dollar weakness. We jump over to the euro right now. Yeah, it's not just, Let's put it back. Yeah, we get some strength in the euro. The dollar is weak, period. Because that doesn't tie into the yen. That's just the euro versus the U.S., the dollar. And you got euro strength. Jump over the VIX. 15.79 as we trail into the weekend. Volatility index up 15 pennies, but under 16. Very little volatility in this market right now. Procter & Gamble up 0.9%. Let's take a look at the banks. So Goldman Sachs down 3.7%. Morgan Stanley off by 2.2. JP Morgan down by 2%. Man, these banks are getting clobbered today. Down 1.3%. Okay, folks, stay tuned. We're coming back. S&P is negative by 2. We got about 20 minutes left to go in the trading day. Come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&Ps are flat. The real story of the day is metals. Gold up by 1.4%. We take a look at the daily. Now, not quite the extension on the volume that we had, whether it was Tuesday. I mean, look at this week, and I know you know this, but my goodness, a run from 4,600 to 5,000. The first 2 days were just staggering volume. We've trailed off a bit since then, okay? Look at this volume. We're going to get a rise from where we were, but nothing compared to what we had on Tuesday and Wednesday's acceleration. Now, you check out platinum. How about platinum? Yeah, platinum's got the volume, man. And you might do it on the close today. 36,000 contracts so far. But this is the day hanging out there. All right, and look, this day, the high was 25.84. Well, we broke above that area yesterday on no volume, basically, compared to all that volume we had on the run up. Jump over to copper, up by about 15 pennies. All right, let's take a look. We talked about the S&P 500. You take a look at the NASDAQ 100. Let's take a look at the Russell, man. Whew, how's that? Check out these financials, man. Even consumer discretionary, healthcare in there, the industrials, my goodness, but the financials. Be careful in these financials, folks. Look at these small cap financials. It's 4 to 5% right now across the board. 3%, 2.5%. My goodness. So you talk about the Fed, speculation at heights. Maybe we'll get it this weekend. We'll find out. Rick Rieder, his market support and Fed plan seen as a boon for his opportunity for chair job. His candidacy has been bolstered by his experience and openness to making changes at the Fed. That's how Bloomberg puts it. The BlackRock executive is seen as looking the part of central banker and also grabbed Trump's attention with his myriad of ideas of overhauling the Fed. So he's made his pitch, and we'll see. Mr. Kevin Warsh or Mr. Rick Rieder look like the two most likely. Kevin Hassett, don't put your money on Hassett, folks. Now, anything can happen. I don't know anything more than you do. But as a betting man just reading signals, he is long gone. Okay? I wonder what the odds are if anybody has him on Kalshi right now. Yeah, Kevin Hassett out there, Chris Waller, Kevin Warsh for sure. And yeah, he supposedly finished his interviews, but hey, as we know, there can always be surprises. But after all the lead up to this, I would be surprised if it's not one of those names. Doesn't mean it can't be. It's the president, as we know. And this one is interesting. So this one has to do with Elizabeth Warren. She's blasting the Consumer Financial Protection Bureau director for undermining Trump's credit card affordability push. But when you look into it, this is where it just the Consumer Financial Protection Bureau, okay, has caps on some of what you can do. And so that's where things get, under your leadership, the CPFB has taken steps to make it easier, not harder, for big banks and credit card companies to rip off Americans. And it has. Some of those protections, whether it's all of that stuff. Okay? Now, that doesn't mean that you cap it down to 10%. That's an unreasonable nature, and we'll see where that goes. But yeah, noted that in the last year, the Consumer Financial Protection Bureau has dropped rules limiting credit card fees, okay, and sided with lenders in lawsuits over deceptive practices and paused enforcement over actions in the industry. So where does it fall? Somewhere in between. But yeah, as they dismantle the Consumer Financial Protection Bureau, which actually has guards in place, I mean, one of those being, late fees, right? Overdraft protection fees, stuff like that, okay? Banks are doing just fine, folks. Allowing them to cannibalize off people when you got a late overdraft and stuff like that. The horror stories that we used to hear, right? You get one overdraft fee, and then every day you're negative, you're getting overdraft fees. All that stuff could come back. It went away because we had rules in place. And, I'd love to cap what people are paying. But I don't think it's going to sit at 10% across the country. Not where risk-free rates are right now. Let's put it that way, because they're all related, folks. If the risk-free rate right now is 4.25% for the 10-year, then it's going to be very difficult to make money lending it out unsecured to credit card holders at under 10%. Now, you can always have lost leaders, right? And maybe people swoop into this area expecting that there's no way that these rules are going to last, and they sign people up on credit cards. That's even worse, right? That's even worse, trapping people into credit cards thinking they're going to be capped at 10%, and meanwhile they're going to be going up. So that's a recipe for just, and it's obviously the people that are in the toughest position when you're talking about credit cards, overdraft fees, right? All that stuff. Yeah, Fed's not seen cutting rates again until June. Well, do you know what June is, folks? That's the first meeting under a new chair. And yeah, that's probably what's going to happen, at least if the data doesn't throw any shocks in there before then. We pull up the swaps on this program often. And economists are now on board with where swaps are. Jump around to some equities. Starbucks has caught quite a little bid recently, so check this out. I was looking at this a couple days ago on this volume spike. Okay, so Wednesday, that was a nice break with volume on Wednesday. Okay, we're off the lows of $82 to 97. This thing has been under extreme pressure. Let's back it up even further. My goodness. Look at this, right? Starbucks from 2015, only going from 65 to 97. They have underperformed, to put it lightly, right? So this is a monthly we're looking at. Is that when their new CEO stepped in potentially last August? Probably. So you get all that volume then. Hey, you know what you do? You get that volume. You get some selling at these lows as well. You'd really like to see more volume on this move. Now, we got 5 full trading days left in Starbucks. That's quite a move. You're at 150 million, and you got to do about 200 million to break above this area. Let's see how many we're doing on a daily. That's going to be a lot. We need about 50 million next week to break above that area. That'd be 10 million a day for 5 straight days. You can do it, but not really the volume. Look at the monthly. Let's check out the weekly. Decent weekly. Nothing too resounding. You're coming up to this, which is the problem. We're coming right back, folks. One more segment. S&P's up by 3. We'll finish this up with Starbucks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's off by 1 point right now, just chopping around 69.44. Very little volatility. We have a VIX right now. Let's check it out. We still under 16? We sure are. 15.74. All the action in currencies and metals right now. Silver's not stopping, man. Up by 6.5%, 102.65. Gold, not quite 5,000. Maybe we'll hit it right as the market. 49.79. We have $4,991.40 on the futures this morning. Platinum makes an all-time high as well. Look at this run on platinum. Platinum was just trading at 2,300 and change less than 24 hours ago. We just almost hit 2,800. Yeah. Whew. And we got the dollar right now at 97.51, down 85 pennies. That's giving a lift to the metals, of course. And yeah, keep your eye on that dollar yen. We're sliding as well. Intervention seems imminent. We'll see. It doesn't always, but yeah, you're pushing that 160 level. It seems like they're coming in with a little intervention to stop the weakening and stem the losses in that yen. And that's hitting all the markets. And remarkable in terms of how Japan's coming into things. We had the problem with their yields this week. That's, of course, impacting their currency. Now you have the action in their currency. That's impacting, of course, currencies globally. And they get metals at all-time highs right now. And some of the big dogs leading the way. NVIDIA up by 1.5% on a daily basis, though, NVIDIA. Not a lot of volume. This is one of the lightest volume days. We'll see what kind of volume we get on the close. But you're up 1.5% right now. We've done 124 million shares. Seem like a lot. depending on the volume we get on the close, that's going to be the lowest volume day of the year. Lowest volume day of the year for NVIDIA. I guess tough to find a lot of buyers on a day where the market has a lot of red across it, besides few select equities. NVIDIA being one of them. Microsoft plowing higher. Meta up by 1.6%. We check in on Tesla, down about 1/10%. But the banks getting clobbered today. JP Morgan down 1.9%. All right, folks, thanks so much for tuning in. Ending your week right here with me at TFNN, the Tom O'Brien Show. Couldn't appreciate it more. Enjoy your weekend out there, folks. Enjoy it with your friends. Enjoy it with your family. And be safe out there. No drinking and driving. Take an Uber. Take it. It's the easiest decision out there. We'll see you back here on Monday.